Hi, it's Ian Hepworth at Funding Solutions. Often we're approached by clients that feel that they're paying too much for their invoice finance facilities. And to be fair, quite often they are. So let's have a look at a few of the things that you can do to reduce the costs, or at least understand whether you're paying too much. So probably the first thing to do, or the first thing that we would do, would be to undertake a market review, because arguably the market determines whether a facility is expensive or not. We deal with the whole market of invoice finance providers, and we can access the best possible rates from our long-term contacts from within the market. It's important to focus on total costs rather than just headline rates. So quite often people get quotes and they'll look at the service fee and then they'll look at the discounting fee. The problem with that is that there's quite often additional fees or disbursements that kick in, and quite often these additional fees can cost you more than, say, the service fee. So they're really significant, and it's important that you understand what you're paying for and how these can accumulate over the course of a year. So we try and focus on total costs for a full 12-month period, and that allows us to do a direct comparison between different quotes to ensure that you get the best possible deal. Other things to look at: do you use your full facility limit? If, for example, you've got a £1 million limit but you're only using £500,000, that's a good opportunity potentially to reduce costs, and significantly so. If you're using factoring and the lender's providing a credit control service, it may well be cheaper to move to a confidential invoice discounting facility where you undertake the credit control. Because you're receiving less of a service, they're not doing the credit control for you on a monthly basis. That can reduce costs significantly. So that's another good option. In terms of managing your facility, you should always try and run your own bank account as close to zero as possible. Now that's obviously, not feasible, but it wouldn't be prudent to have a large cash balance sitting in your current account of your bank while you were borrowing money on your invoice finance facility. You'd be paying the discounting fee on what you were borrowing unnecessarily. The other things to look at, maybe if you can manage cash flow better, if you can use backs instead of chaps, the chaps fees can add up. But probably the best thing you do is have a word with us, explain to us what you've got in place, what you would like in an ideal scenario, and we will come back and explain what your options are in the market, explain them to you in full. There's no hard sell, just some honest advice about what's out there so that you can make an informed decision. If you'd like to speak to us, we're on 0845 251 4040. Alternatively, drop us an email, finance@fundingsolutions.co.uk. We'd welcome the opportunity to speak with you. Thank you very much.